Thanks for joining us on Power Lunch. This is BloombergQuint and I'm Dugal. Let's get straight to the headlines this Friday afternoon. Indian markets look all set to post weekly gains with the Nifty back up above the 19,900 mark. Kishore Biyani expects the Hypercity deal to add 100 crores to Future Retail's earnings. Govind Srikhande says that it will cut Shoppers' top debt by almost half. The National Company Law Tribunal rejects Cyrus Mistry's plea to transfer the original petition against Tata Sons to the Delhi bench. And the economy will see an uptick by the end of this financial year. That's the parting message from Arundhati Bhattacharya, who bids adieu to State Bank of India today. All right, all of those stories and actually more coming up here on the show. But let's, as always, take a first look at the markets. Pradeep Pandya is joining us. Pradeep, what's the equity market action looking like this Friday?
It's looking quite strong, I would say, because if you look at bond market, yields are still inching up, but that hasn't affected the banking stocks today. Even PSU Bank is participating in a big way. PSU Bank Index is among the top gainers in today's trade. Even currency is weak, but that hasn't really perturbed the traders. If you look at the market, it's not only the Nifty, Sensex, Bank Nifty, not only the large cap, but mid cap and small cap are doing even better, which means sentiment is really strong. Despite the fact, if you speak to traders, they feel that 99.50 odd levels plus minus 20, 30, 40 points is kind of a hurdle range that traders have been looking at. But doesn't look like there is no selling pressure as such, as yet in trading today. So I think all the indicators are looking quite positive. With banking sector coming back, you also have metal, which is doing quite well. There was some correction in commodity market over last few sessions, but now I think this is second or third day when base metals have managed to bounce back. We had Tata Steel reporting the last month's production numbers that were also strong. So all this has contributed to metals, in fact, leading the charge in today's trade. Even SAIL is contributing quite a bit. So I think it's a broad-based buying, which looks interesting in spite of the technical hurdles or the derivative hurdles that we are facing right now. So it's all good as of now.
Tough to say, but 10,000 sort of back in striking distance.
So that is the issue. I mean, 99.50 to 10,000, you'll have multiple hurdles, various reasons. When you reach closer to 10,000, again, analysts will come back and start thinking whether these levels are actually sustainable. So I haven't heard many traders or analysts really giving a call that market will be able to cross, previous highs, and we'll see new high anytime soon. But as of now, there is no major shorting, which is interesting.
All right, Pradeep, thanks so much for that. That's the big question. Are Indian markets expensive? We've been asking it for a long time. We asked that question to Basant Maheshwari, who was on BloombergQuint earlier. He said it's not a concern if you pick the right companies with the right amount of earnings visibility. Listen in.
In the market, it's not about valuations all the time. It's about how many companies are able to grow at that rate. So if the number of companies that are able to grow at that rate reduces, obviously the money that chases those companies obviously creates a more bigger impact. So I think that's the way to be it. But of course, I'd like to buy them cheaper. But if you don't buy them cheaper, then what do? You buy them, and if the growth is predictable, sustainable, and sure, then you assume, okay, I won't make money for 1 year, I won't make money for 9 months, but the incremental earnings growth is going to reduce the valuations for me. But for that, you have to be very sure of what you're buying. And if you are sure about what you're buying, then you might say, okay, I won't make money for 8 months, for 9 months, for 1 year, in the worst case scenario. But if the growth is predictable, the stocks automatically get cheaper with each passing quarter. So that's how we are playing the game.
All right, that's the secondary markets. Now, the fact that the secondary markets have remained buoyant has also meant that the primary markets have remained buoyant. We've had a host of IPOs come in. We're, in fact, taking out previous highs in terms of aggregate amounts raised to the IPO market. But an interesting question to ask is who's making the money out of this IPO rush? Is it the promoters and the investors, or are the companies themselves benefiting? Samit Sarkar has done some interesting number crunching. Samit, what have you found?
So India's record year for IPOs hasn't made the companies richer. In fact, it is the promoters and the investors who have cornered most of the gains. Now, of the 29,000 crore rupees raised by more than 20 companies in the financial year 2018, 84% was through an offer for sale route, while the remaining 16% was through issuing new shares. Now, when a company raises money through offer for sale route, the proceeds are given to the promoters and the investors who are the existing shareholders and not to the company. And when there's a fresh issue, it's the company which gets the money, and it can be used as capital investment by the company. Now, 2014 was an exception when the total funds raised was through fresh issue, as only one company came out with an IPO in that financial year, and that was Just Dial. While if you see the 16% that has been raised in financial year 2018 by fresh issue is the lowest in at least 29 years. So it is the promoters and the investors who have been making most of the money in the financial year 2018 and not the companies.
Two questions, Amit. So, I can't read the numbers very clearly. If that is FY09 numbers, so actually the situation is almost entirely reversed from the previous, year where you had very heavy IPOs.
Yes, it has, because no, it was actually financial year 2011 when the number of IPOs were around 33,000 crore and not financial year 2009.
Okay, and even in the upcoming IPOs, we're going to see a similar trend continue?
Yeah, GIC is coming up with an IPO of around 11,000 crore, in which it's 9,800 crore, which is an offer for sale, where government will be looking to dilute their stake, and the remaining close to 1,500 crore will be an fresh issue.
All right, Soumit, thanks so much for that. That's actually fantastic data crunching, and it tells you the nature of the IPO market right now. It is not the companies who are raising capital to invest. It's the promoters, it's the investors who are using this sort of IPO boom to cash out. Nothing wrong with that, but just who benefits is important to understand. From the equity markets, let's go on to the commodity markets. Crude oil continues to climb. Both WTI and Brent are trading firmly above the $50 a barrel mark, as OPEC indicates an extension of the production cuts. Earlier this week, Russian President Vladimir Putin too said that the country is open to supply restrictions. To understand what this means for the commodity markets, let's welcome in David Lennox, resource analyst at Fat Profits. David, good morning or good afternoon your time. Thanks so much for joining us. What do you make of the supply side story on crude oil? Is that going to keep crude above the $50 mark?
Oh, good morning. Certainly, if you have a look at the comments that both Vladimir Putin and the Saudis have made regarding the extension of the current 32.5 million barrel ceiling beyond the 31st of March, then one would suggest that, yes, we're going to see some comfort from the market in that that extension will occur, and that will keep somewhat of a lid on the oil prices or on the supply of oil going forward. There is, however, a headwind to that, and it's been one that we have seen for some time. And of course, that's what we've seen happening, unfortunately, inside the US, where domestic production has continued to rise basically over the course of all of 2017.
So if these production cuts were to be extended, David, what does that mean for prices? It means that they remain around current levels, or would you expect some sort of change in direction?
Certainly, we've seen that change in direction in recent times, where the oil price had been sitting, the WTI price had been sitting below the $50 level, and we would suggest that it's probably going to hold somewhere around 50 for the foreseeable future. And that's because when you look at what is happening near term, the market still has to get quite used to the fact that OPEC will comply with the 32.5 million ceiling. They've done well so far, and yes, we've had comments from two key members of that alliance that that's what's going to happen into the future as well. But we still have a long memory of how OPEC, unfortunately, don't comply with their rulings, and we will be watching very closely there. The other is, of course, US domestic production. It's now sitting back at 9.5 million barrels post-Harvey, and we do think that that's going to be a real sore side in the side of OPEC, primarily because they are now exporting around 2 million barrels of oil a day. That's a record. And some of that oil, we believe, is landing in India, which is a key OPEC territory. So we're watching very closely what that could do to prices if OPEC, in fact, turn and say, we want to claim back that territory. A price war could ensue.
David, there is a lot of talk about at the macro and demand level, a lot of talk about the fact that global growth is looking strong. Some of the metal complexes have responded to that. But on the oil side, it's slightly interesting, or maybe perhaps disappointing as well, that despite that talk of strength in global growth, you haven't managed to see oil rally on the back of that.
Oh, no, look, we certainly do think that there's probably been somewhat of an input from the markets now, considering that 2018 certainly will look stronger globally in terms of growth. That will have some impact on the oil price. But at the moment, it really is a supply side story that is driving the price. Of course, the OPEC ceiling, the US domestic production. So both of those tend to be working, unfortunately, at the moment in opposite directions to each other. And that's what's keeping a lid on the oil price. Now, that's likely to continue into 2018. We certainly won't see domestic production in the US easing, and we're not likely to see OPEC go any further than 32.5 million barrel ceiling. So that would suggest that then we do need to see that stronger demand lift coming through. Markets aren't quite sure that that will happen in the oil markets as yet. So they are keeping quite, I guess, conservative in terms of rallying those prices. The commodities, especially the industrial metals, they're far more happier to see that growth outlook going forward into 2018, and they've reacted accordingly.
David, net, do you think this $50 a barrel mark is sort of turning out to be, for now, the equilibrium level? I mean, you see, some periods of time above it, some periods of time below it, but it always seems to tend to come back to that level.
Yes, look, we certainly think that that's probably about it. We thought it was somewhere between about $45 to $50, primarily because we believe that that's probably where the marginal cost of US production now sits. It's come down from about $55 to that level. So if that's the marginal cost of production, then certainly the oil price is probably not going to move too far away from that particular level until such time as we see a movement either in demand that's certainly sustainable, or we do see other geopolitical events that perhaps drives production out of the market.
All right, David, thanks so much. Appreciate you taking the time to speak to us and explaining the crude oil markets, a bit of supply side trigger that led to that conversation. Back home, the GST Council is back in a huddle today, this time in Delhi, and the focus is expected to be to provide some relief to exporters and small and medium enterprises. Joining us now on the phone line is Nikunj Johri, who's tracking that meeting. Nikunj, no way of knowing exactly what they will eventually come out with, but what are some of the issues that are going to be on the table to discuss and debate?
Right. The GST Council would consider to give some relief to exporters and small businesses in today's meeting, especially for exporters. Now that the government has allowed exporting goods and services without payment of IGST, GST Council will look at processing and providing them quick refunds through a proposed fund which was recommended by the Ministry of Commerce. For small businesses, the GST Council would consider increasing the threshold limit for availing the composition scheme to about ₹1 crore from 75 lakh rupees earlier or currently. Remember, under the composition scheme, traders, manufacturers and restaurant owners have to pay a flat GST rate of 1%, 2% and 5% of their turnover respectively. The council is also expected to discuss to make the composition scheme available for more service providers and not just restaurant owners. Other than this, the council is also expected to make composition scheme available for small traders or dealers who make interstate supplies. Currently, just to give a background, dealers and traders who make interstate supplies cannot avail the composition scheme. So it's also expected that the government will make, so if dealers who make interstate supplies are not allowed to avail the composition scheme, other alternative would be to make the return filing process simpler for small businesses, and this could also be made quarterly according to some media reports. Over to you.
All right, Nikunj, thanks so much for that. We'll track that meeting and you can get all the latest updates on BloombergQuint.com as and when the news breaks. Moving on, the National Company Law Tribunal has rejected Cyrus Mistry's plea seeking a transfer of his original petition against Tata Sons to the Delhi bench. Arpan Chaturvedi is joining us on the phone line with the details. Arpan, just explain to us what the case was, why they wanted, let's get across to Arpan for the details on that.
The Mistry firms had approached the principal bench of the NCLT in New Delhi and had sought a transfer of the oppression and the mismanagement petition against Tata Sons that is being heard at NCLT Mumbai. And the reasons that they had given in their arguments was that at an earlier occasion, remember when the maintainability and the waiver of that petition was being heard at the NCLT Mumbai, which had at that time rejected the petition and but was subsequently overturned the decision on the waiver part by the NCLAT. During that time, the hearing of the maintainability and waiver petition, the NCLT Mumbai Mistry's counsels argued that had gone into the merits of the case, and they made it clear that they're not alleging any personal bias, but on the fact that the NCLT Mumbai, while deciding the maintainability and waiver petition, had already gone into the merits of the case. On those grounds, they had sought a transfer to the NCLT Delhi bench, and they said that that should be the bench which should have been hearing this case. And the Tata Sons lawyer, of course, had asked for that petition, the transfer petition, to be rejected outright, and they had said that the Mistry firms had raised this argument or this request at multiple forums, including the NCLAT, and had accused the Mistry side of going forum shopping. Now, today in the judgment, the NCLT Delhi has rejected the transfer petition of the Mistry firms, as well as has gone on and imposed a cost of rupees 10 lakh. So what this basically means is that the oppression and mismanagement case that the Mistry firms had filed against Tata Sons will now be heard back and by the NCLT bench in Mumbai itself.
All right, Agam, thanks. Thanks so much, Arpan, for that. Future Retail continues to expand its footprint. The Kishore Biyani-owned retail chain will buy Hypercity from Shoppers Stop for 655 crore. That's news that came in yesterday. Agam Vakil is standing by with the contours of the deal, actually more than the contours of the deal, just trying to explain to us whether we got any new takeaways from the management who spoke, Agam, and also what brokerages are saying this morning about the deal.
Yes, Ira, we did get a lot of takeaways from the press conference which just concluded some time ago. What's come out of the press conference is that from Shoppers Stop point of view, they do have the advantage of the debt leaving their books, and this will reduce the debt by half to around 100 crores when Hypercity moves out of the books of Shoppers Stop. Moreover, they're also of the opinion that the food and beverages need some amount of consolidation that Shoppers Stop may not be able to provide, which is something that Future Retail will be able to push as far as Hypercity is concerned. From the Future Retail point of view, not only does it get 19 stores, but it also gets access to geographic areas or geographic locations in which Future Retail is not present in. Of course, Hypercity has a very strong customer base and a good customer base according to the management, and that is something that Future Retail will be keeping an eye on. On the profitability front, we do know that as of now Hypercity is not profitable, but they suggest that it will become profitable immediately in the short term, and in fact they're expecting EBITDA to be as much as 100 crores in the next couple of quarters. So these are some of the key takeaways. Of course, as far as IDFC Securities on Shoppers Stop is concerned, once again they are of the opinion that the debt moving out will be a substantial increase for and it will be a meaningful increase for its profitability. So on the whole, it seems like a win-win situation as far as the street is concerned.
I think it will turn profitable immediately. They are profitable already at the store level. I think we liked what we saw in Hypercity, and we believe what we have done up till now, we can add value to this business. We can make this business very, very EBITDA accretive for us. Today, the EBITDA, what we had projected, I think the first quarter was around 7 crores in Hypercity at the store level. We believe we can touch easily close to 100 crores of EBITDA as we move forward with introduction of FBB, introduction of some of our private brands. We are very keen to start FBB Fashion at Big Bazaar at this Hypercity location.
Shoppers Stop debt is divided into two parts. One is the 492 sitting in Shoppers and the 265 sitting in Hyper. That debt gets passed on to the Big Bazaar group. The 492 will come down by almost 50% over the next 2 quarters.
All right, moving on to the aviation space, there is a need to bring down costs in the sector. That's the word coming in from SpiceJet chief Ajay Singh. Speaking to BloombergQuint's Krishanu Mukherjee, Ajay Singh said that he hopes that ATF will be included under the ambit of GST and is asking the government for the same. Let's hear out this conversation from Ajay Singh.
As a whole, we need to bring down cost of aviation. This is also part of the Indian aviation policy. that cost of aviation must come down. So we have to work relentlessly towards bringing down cost of ATF, bringing down cost of airports, bringing down taxation in the system. And if you can bring down cost, fares will come down and the aviation sector will grow even more rapidly than it's growing today. So we are discussing this constantly with the government. Government is, and especially the Civil Aviation Ministry, is very aware and pushing this hard. As happens around the world, we need ATF to be included in GST to get input credit for it, and this is something that we are raising with the government, and we hope that there will be a resolution.
Just speaking about low costs, RCS and Udan, the second round of it is coming now. You're due to bid in a month. Have you shortlisted routes so far? What sort of routes are you going to bid for?
Well, it's we are going to bid for sure. Which routes these are going to be, that's still being worked out.
So another aspect that is being mooted by a lot of your rivals is the aspect of a low-cost, long-haul carrier. As SpiceJet, a carrier, you have international operations, but not extreme long-haul operations. Are you looking at the concept of low-cost, long-haul operations and SpiceJet being a party in that also?
We think it's a very interesting idea. We think that there's a great market in India, and many more people would fly overseas if the fares were lower. Right. For that, the cost has to be a lot lower than it is today. And of course, we are studying it as our other airlines.
Wind power prices have plunged to a record low of 2.64 per unit at the latest reverse auction, bringing into question the feasibility of some of these projects. Suzlon Tulsi Tanti, in fact, said that banks are afraid of funding renewable projects with tariffs below 3 rupees per kilowatt hour. Brokerages too have turned cautious on the wind power sector, citing multiple headwinds. Jayesh Khilani is standing by with some of what brokerage reports have said this morning. Jayesh.
Ira, let me start off with the first note, that is by CLSA. Now, what they're expecting is that some of the discoms will stop signing new PPAs. Also, there could be some pressure on renegotiation of some of the existing PPAs that are currently there. So what essentially this will do is that it will force the wind turbine generators to cut prices, and the developers will have to accept lower returns. Overall, they expect that the current pipeline backlog could also be cancelled. So for Inox, we have already seen some bit of cancellations, and they expect that Suzlon could also follow suit. The other note that we picked up was from HSBC. Now, this is very interesting because they have a contra opinion on this. So they are viewing this as a buying opportunity. So they have a buy rating on Suzlon with a target price of 22. That implies a return potential of nearly 40%. Why is that so? Because the FY19 expected EV to EBITDA, that is for Suzlon, is currently at about 10.5, and they expect that the fair value should be close to 13x. The other one, buy on Inox Wind. The target price is at about 166, which implies upside potential of nearly 50%. The FY19 expected EV to EBITDA is at about 5.2x, but according to them, the fair value should be at about 8x.
All right, Jayesh, thanks so much for that. That's a story that's been playing out in renewables, first in solar and now in wind. To the banking space now, Arundhati Bhattacharya will step down as chairman of State Bank of India later this evening. She's been at the helm for 4 years, and what a 4 years it's been. From demonetization to the bad loan cleanup to a merger of associates, and of course the whole move towards digital banking. Bhattacharya has tried to lead it all. She had one last meeting with banking reporters this afternoon, and she still had a strong message, although she said that this is an informal briefing. Vishwanath is joining us. Vishwanath, she had something to say irrespective of the fact that it was her last day. She had a lot to say, actually.
Well, what Ms. Bhattacharya is specifically saying is that I'm not going to be in the area of banking, or at least in banking specifically. I'll probably be doing something else, but definitely not hanging up my boots. What she says is that 60 is probably too early nowadays for somebody to retire. So she's going to continue working for sure after this. Some part of her unfinished agenda that Ms. Bhattacharya has pointed out is probably bringing in some more digital innovations, which the bank had promised to bring in earlier this year, but couldn't because of some delays. Another issue that she wants her successor to focus on is that of credit growth, and till that lagging credit growth comes back into the system and the bank is able to take benefit out of it, she thinks that the next wave of growth is probably not possible. During her briefing, she's also talked about the multiple policies that the government has brought in, and said that there might be some interim pain in the implementation of these policies, but going ahead, we should see this improving and the economy showing an uptick over the next over this financial year. That is specifically, she said that this financial year is when you will start seeing the uptick. Lastly, but definitely not the least, is a message to the corporate borrowers. She said that the errant corporate borrowers will probably not be happy that she's leaving, that probably at the end of her term, the successor is definitely going to take the charge of NPA resolution forward and ensure that that grip that SBI maintains on some of these borrowers will continue.
All right, Vishna, thanks so much for that. She's been a tough taskmaster in all of these corporate loan negotiations. From everything we hear, she will be missed at SBI, but SBI is an entity which has large bench strength, so a lot of these issues just get carried forward to the next chairman without much trouble. Speaking about banking, but this time interest rates, we might be closer to the bottom of the interest rate cycle. That's the word coming in from Cyrus Mistry, Vice Chairman and CEO of HDFC Limited. In a conversation with Neeraj Shah earlier today, Mistry said that rate cuts alone will not spur investments. Listen into that.
We are as close to the bottom of the interest rate cycle as we are likely to get. It does not preclude the possibility of a 0.25% cut in rates over the next few months. But the big bang drop that we saw in lending rates over the last 12 months, I think that very, very clearly is behind us. Rate cuts can never really by themselves move the investment cycle. People start investing in projects not because interest rates are low, they invest in projects because they see demand. So you have to create demand. You have to first thing that has to be done is there is excess capacity that is there in the system. Capacity utilization is about 72-73% from what I've read. And till and until we see that number getting closer to 80 or beyond 80, you're not going to see any big bang private sector investments take place.
All right, that's the word coming in the economy. Thanks for watching this edition of Power Lunch. Have a good afternoon and a good weekend.
Are we live?
Welcome.